Morning and welcome to this webinar where we're going to show you how we've developed new functionality to support modelling multifamily or residential investments in Forbury. My name's Tim Dolan. I'm the VP of Sales at Altus Group for Northern Europe. Good to see so many people joining us today. It looks like there's a lot of interest in standardising the way that the industry models this asset class. I'm joined by my colleague Ryan Spear from the Forbury team. So Ryan, do you want to give yourself a quick introduction?
Sure thing. Thanks, Tim. I'm Ryan. I head up the product for the UK and Europe. So that means overseeing the commercial models and that functionality, as well as overseeing the multifamily residential model that will be shown today.
So going to be back doing another webinar with you, Ryan. I think last time we were here, we were introducing Forbury and some of the enhancements made since the acquisition. I think this time we're going to present this key addition to Forbury, and it's the multifamily residential model. Do you want to give a bit of background as to how we've gone down this route?
Sure thing. So a little bit of an overview. So obviously the market for multifamily asset class in the US is huge. So you can find sources claiming from a quarter to a third of both volume and dollar investment in that market is going to multifamily. So the UK has been a little bit of a slow starter in this space compared to the US and Europe as well. But looking back over the last 5 to 10 years, you can clearly see there's been plenty more stock being built and being traded as well. So we're looking to address the same challenges we solve with our commercial asset models, but in one of the quickest growing asset classes. So those challenges being quickly underwriting large tenancy schedules, being able to perform easy scenario analysis, and really fundamentally providing the market with a way to all be on the same page and talk in the same language. So, you often look at 10 different in-house Excel models and you'll find 10 different ways to calculate a metric that has the same name. So I'll be running through all of these and a little bit more as well today during the demo.
Awesome. So thanks, Ryan. So fundamentally, how we can make a decision quicker and everybody be able to be in consistency in the decision making process. So here's the structure for the webinar. I'm going to provide a brief overview of what you're going to see, and then Ryan will do the demonstration of the model. Before we start, a bit of housekeeping to help us have a smooth webinar. Please note that this webinar is pre-recorded, and you will notice on the right-hand side of the screen, you will have a chat box where you can ask questions. We'll do our best to get back to you via the chat box as soon as we can, but if we're not able to answer your question during the session, we'll try and email you back within the next 24 hours. Throughout the webinar, we'd also like to open up some poll questions, and we'd love you to take part in those and let us know your thoughts and answers. So for the first poll, what are you using to model your multifamily residential investment appraisals? Is it Excel, Argus Enterprise, or another system? So just moving into the breakdown of what you're going to see today. So during this webinar, I think this is all on the registration pages, you've had to see how you can first and foremost accurately predict your returns on residential projects, so making informed decision making. We're going to be able to show you how you gain insights into financial implications of complex joint ventures and partnerships, how you can evaluate the feasibility of a stabilized asset, and looking at how you analyze the financial impact of forward funding and forward committed strategies. One of the most important things people like to see is the automation of the tenancy imports. And then finally, as Ryan mentioned, the ability to explore different market conditions and investment scenarios to assess the risk and the opportunities. So for those who aren't familiar with Forbury, obviously there's going to be people on this call who are using it, but Forbury was developed for simplifying the underwriting process, and it was built to automate the time-consuming tasks of importing lease information and entering repetitive assumptions into their models. The solution is delivered in Excel, so it has a very familiar look and feel for most people. But most importantly, it's powered by cloud so that the calculations are done efficiently and at scale. And so it means that you get the confidence and integrity of the data and the calculations. Finally, the reporting capabilities in the system will allow you to produce a professional output, and that can be easily configured to align with your logo and corporate templates. So let's do a second poll, and I think this one is more for Ryan to know, test the heat on what else people are looking for. What other operational assets are you looking to model? And here we've got PBSA, senior living, hotels, and leisure.
Yeah, come on, tell us what we need to go into next.
Good stuff. Right. And on that front, so Ryan's obviously and the team have been busy in terms of what you're getting in Forbury. So currently in the short term, the residential model is available now, so people who have a subscription can access it as well as the commercial model. We've also the commercial model has also been enhanced with support more European lease structures, currencies, and indexation. So clients are already using that. And obviously, we're looking to align the calculation engines with Argus Enterprise as well. So there's a consistency in the way that the numbers are produced. Next up is the forecast management piece, as we see more people on the commercial model moving into more asset management functions. So these are things that will be coming in the not too distant future. And we're also further enhancing the ability to import and export Argus files between Forbury and Argus Enterprise. So the current integration supports tenancy data, but there'll be further enhancements planned in the not too distant future. Later on, we're also looking at enhancing the multifamily capabilities to support more clients on the continent. And obviously, we're looking at moving Forbury data into Argus Intelligence. And Argus Intelligence is a platform that our clients will be moving to throughout 2025. So we're actually running a webinar on this on the 20th of February at 11 o'clock. So I'd encourage you all to join that to see how data and analytics can be embedded into everything that you do and ensure that you can make decisions quickly and with confidence. So on that, I was going to provide a little bit of an introduction to Argus Argus Intelligence as well, and that'll give people a bit of a background because everybody will know us for the software piece in the market, so Argus Enterprise for valuation, asset management, and Forbury for acquisitions, Taliance for fund management, Developer for development appraisals, viabilities, along with Estate Master. But there's also capabilities within our data analytics piece with Reonomy, which holds about 54 million properties in the US and a lot of data underpinning that. And then our advisory teams who sit between the valuers and the valuers and provide a service there where they touch over $1 billion worth of AUM every quarter through North America and about 100 billion of assets through Northern Europe every quarter. So there's a lot of data and information that we're involved in on a regular basis throughout the business. Now, historically, those have all been piecemeal and separated applications, but we're bringing all that together into a comprehensive and unified data platform, and that's where Argus Intelligence will come into play. Now, how that will look is that you will start seeing the capabilities and the data produced by our applications, such as Argus Enterprise and Forbury. Now, currently, it's only Argus Enterprise, but all this information is going through our proprietary entity resolution technology and then sitting in the unified data layer. And that's where clients will then be able to use capabilities around asset level to portfolio. In 2026, you'll start seeing benchmarking capabilities coming through in Europe. That's planned for Northern America in 2025. And then also some of the performance metrics and fund modeling capabilities that we already support through the Argus Taliance piece. And then finally, obviously, the reporting capabilities. So join us for the webinar on the 20th, and you can see a lot more of that capabilities. Now, I'm going to ask another poll question before we jump into the demonstration. And are you focused on forward funding or commit or income earning assets? Yes or no? Okay, Ryan? I'll hand over to you for the demonstration.
Straight over to the demo. Thank you, Tim. All right, so I'll begin sharing my screen here. So what you're seeing now, this is the Forbury portal. So I won't spend too much time here. I'll get straight into the good stuff in the model. But just to give you a holistic picture of what's going on here, Forbury portal is a place to start your modeling. So here you can choose what type of model, your commercial model, your commercial portfolio, or the multifamily model here as well. So really simply, this is a place that can store the assets you've looked at for you to look back on later, but primarily it is a place to get started with your model. You can set up your model with house views, ways to populate data automatically, but really we click download and what we get is a regular Excel file. So no macros, nothing crazy in this file. You'll see it just starts download and it's an XLSX file. And when we open that up, this is what we are presented with. This is the Forbury multifamily model for the UK and Europe. Like I alluded to at the start here, there's a lot of action in the build space, but also we're starting to see more standing income producing assets being traded too. So this model here has capability to do both. What I'm going to start with today is just showing you how to underwrite a income producing asset. And then after that, we'll touch on how to use the forward funding part of this model too. So to get started, on this model here, you'll see it is just a regular Excel file. You can use all your regular Excel functionality, but it does have a couple of key differences. So number one being that the outputs here are protected. So anything that's not a blue cell, like these here, they're protected outputs, so you can be sure you haven't accidentally deleted the NOI output or the IRR or something important like that. And the second that you'll notice is this Forbury add-in over here on the right-hand side. This does a few things. First and foremost, the most key thing it does is run the model. So when you enter your inputs and you want to update the cash flows, you'll have to click this Run Model button. That sends inputs off to the calculator, as Tim alluded to, the Argus calculator, writing them back into Excel so you can analyze those outputs how you like. And you'll see in some of these formulas here where we can display the information in an Excel formula for you to analyze and review and audit, we will do. So to get started, we've got no information in this model. It is a blank model. And you'll see down the bottom, we've got these light blue sheets. These are our input sheets. And our dark blue sheets here are our output sheets. So this is a very condensed type model. Our ethos is to try to keep it as simple as possible and as quick as possible when using a Forbury model. So getting started, we have a rent roll sheet here. This is where all of our residential income is going to be driven off. There are two sections here. We've got our rent assumptions. This is what will drive our cash flows. And we've also got a section here for our rent roll schedule. So like I said, completely blank, nothing in here. So to get started, much like our commercial model as well, the best way is to import a tenancy schedule. So from here, we can import an Excel tenancy schedule. Doesn't need to be in any template or format. And the way we do that is we select this box and we go and select the tenancy schedule we want to import, whether it's a property management system or you've been sent it by an external party. And step one here is it has found a header row from this file. So it thinks it's found a table and there is a header row here. And yes, that is the header. So I'll click select header. And now this is why it doesn't need to be in any template. So on the imported name, we have found the labels in the source file. And you'll see here the Forbury name is what we call it in the Forbury model. So we've gone through, we've made a good guess at what we think should line up. So a lease ID in this Forbury model is called a tenant ID. The room type. So if we ever miss anything or get it wrong, you can simply select from this drop down and that will be the type. And then we've got one more, which is the current rent, and that is the in place. So that's how you set it up. for a tenancy schedule that you haven't seen before, if they're coming in the same format every time, you can simply select Save My Header Selections. That'll create a template, and you can skip this whole process next time. So next, we can just review if we want to move any tenants around. But once we've imported, we can also change that information as we like as well. We're not fixed to what we imported. So as quick as that, we've got our tenancy schedule imported here with our room types, the IDs, tenant names, areas and move-in dates, the in-place rent, market rent, and a security deposit here. So as it stands right now, we've got a bit of a rent roll summary, but this isn't going to generate our cash flows just yet. So after we import this, we might want to review the information, make sure it's correct, double check things. But once we're happy with it, we are going to use the add-in again on the right-hand side here and push our rent assumptions. So I'm going to transfer the rent roll, and that is going to take all the information in our schedule and push it into our rent assumptions here. So you'll see there are 4 types of rooms here, and we've detected that there are 8 studios in this rent roll schedule with an average area of 480 square feet. The average gross potential rent, the occupancy. In this case, we don't have any vacant units, but the occupancy will vary depending on that. And much like the import, you're not stuck with just that transfer. You can change any of these assumptions as well. So if we're looking at maybe making an assumption for 95% across the board for years 1 and years 2, and then we might want to bring it up to 98 there on out. So you can use your Excel functions as you normally would, copy, paste. We move into our loss to lease. So is our units on average under rented, any concessions we might want to give away, any rent free, and a credit allowance if we've got any bad debt forecasted. So these blue cells are just regular Excel cells. So if I want to take a formula and say take half of this value, you can do just that. Easy as that, and enter that in, and we'll take the value from the outcome of your formula and we'll put that into the calculator. So that's our rental assumptions here. That's going to generate our rental income. Next is our miscellaneous income. So we might have some laundry, we might have some forecast laundry revenue. I'll say that's £12,000 a year there on out. And one of the biggest key differences from our commercial models is this deep expenses page here. So anywhere you've seen a table much like this, or on the rent roll here, while I haven't expanded them, you are free to add as many rows as you like. So you won't be doing that through your traditional way of inserting like this. That's grayed out. What you'll do instead is use the add-in. So here I can insert as many more rows as I want. If you want to go really detailed into your operating expenses, just use the add-in there. We can insert rows. And the exact same for deleting rows. I can just select these 4 and delete those. So the number of options you have for your operating expenses. So you've got a section for your trailing 12-month operating expenses. And then we go into our forecast. So we've got a few options here. We can do a percentage of the gross potential rent, that full ERV amount, a percentage of our net rental income. So after all those occupational percentages we put in there, as well as our loss to lease and that sort of information. £1 per unit per year, if we've got a price per apartment or unit, and just a flat £1 per year as well. You can change the currency in this model as you like, and if you'd like to change it from being called apartments or units to anything else, you're free to do that on the dashboard too. So I've got some information here. I'm just going to paste right in. Just like Excel, you can paste your values in as you like to speed up the process. So there's our operating expenses, CapEx. Very simple. We can throw in some capital expenditure. We can straight line that, or we can make assumptions on an annual basis, including whether we want to fund this CapEx spend in a debt facility. I'll skip that for the moment though, and we'll jump back to the dashboard. So now, just reviewing our general information, we have an acquisition date of the 1st of February this year and a whole period of 60 months. This can go up to 10 years, soon to be more. And then how we want to price this asset up here. So 2 options for the pricing, or 3 really. On your approaches, you've got an NOI that will look at the next 12 months of NOI and will capitalize that amount. Or the direct cap that will use your day one annualized number, more akin to using a net initial yield on a commercial property. So if we say, let's go in on a 7.5% NOI and we'll exit on 6 3/4 to make it look good. Of course, you can put in your acquisition costs here, label them what you like. But for the moment, we are going to go ahead and run model using the Forbury add-in. So what we've done so far is we've imported our tenancy schedule, set up our expenses, some of that miscellaneous revenue, and now we've got our key sort of outputs here. So we've got our occupancy levels that we entered, the OPEX as a percentage of that net residential income, and then our investment returns. So this investment is requiring us to put in 4 million. We'll get back 6, so we're making a profit of 2, multiple of 1.5, and that leads us to an IRR of 10%. You've got your sensitivities here, of course, as well. And you'll see another section here for the equity returns. So they are the exact same right now. We haven't put on any debt or assumptions about JV partners going in on this deal. But if we move to our monthly cash flow, all your monthly amounts are here, starting from your gross potential rent down to your net residential income, operating expenses, to get to your asset cash flow down here after your capex and purchase and sales prices. Of course, down below here, you have all your finance cash flows, and we'll touch on that in a moment. But first, I'd like to go back to the dashboard, and I think this is a pretty good starting point. So what I'm going to do here is once again use the Forbury add-in, and I'm going to go into my scenario management this time. Every Forbury model starts in a base case. So everything we've been running so far is our base. And now I want to start a new scenario, my upside scenario. So I think this is pretty good, whether I take it to a partner, the investment committee, whatever it may be for my own purposes. And now I'm going to go upside. Let's see what happens if we make some more aggressive assumptions. So I'm going to firstly make some assumptions about our revenue growth. Year 1 will be 3, then it will drop off a little bit to 2 3/4 for the next few years. And just to be cheeky, I'll say my expenses grow at a lower rate. So we're always going up. That is a good upside, I think. And we'll assume our exit yield. We can also exit a little bit higher. And maybe in our rent roll, if you'd like, you can go and play around with your gross potential rent. For this example, I'll bump up the studio price. Once again, we'll come back, we'll run the model, keep an eye on our IRR and our equity multiple, and we'll see how they change. Nice, 14.8% IRR now. The reason we have gone and used scenarios within the Forbury add-in is, one, we see a bunch of people running their own Excel models, and to run scenarios, they're saving 6 different files into a folder. And then when they've got to aggregate that information up, they're trying to open everything at once and trying to compare the numbers. It all gets out of control very quickly. But in the Forbury add-in, by using these, we can go to our scenario sheet. And you'll see here now we start to have 2 columns stacked up side by side. So we've got our base and our upside. And as we add more scenarios, you can add as many as you like, you'll start to see more columns start to be stacked up. So you can compare those two. So here we can compare our asset IRR, our profits, our multiples, the NOI that we're using at exit, the NOI we're capitalizing at entry as well. So you've got flexibility to make as many of those scenarios and change whatever you like. The final thing I will touch on in the model for running a standing asset is the finance. So I'll come up a little bit, and Tim covered it on the intro, but here you have the ability to model up 3 different equity parties in on this deal. So I might say party 2, they are putting in 20% of the equity into this deal, and they'll receive 20% of the distributions. They'll receive 20% of the profit share, but they're also going to receive 100% of the promote fee that we lay out too. So now you'll see these IRRs are the same. If we start to tweak the profit share differently, you'll see that now our parties have different IRRs, different multiples, making different profits, but I'll keep it at 20% for the moment. As we come down on the finance sheet, you have initially the ability to put in your debt here. So yes, I want an initial facility at acquisition for this, and I'm going to set it as 55% of the purchase price. And we are starting this financing in month 1, repaying at the end of the whole period. I'm going to put in a base rate of 3 with a margin of 2.2 on top of that. So really simple. If all you want is an acquisition facility, see how that impacts your returns. You'll see here now we're ticking up to 23% IRR due to that debt. Jumping back to that finance, you can go and refinance that facility in the future. More useful as well. That applies to the forward funding work too. So as you come down, another CapEx facility, if you want to fund your CapEx spend and separately with a different rate, and your promote fees. So let's say in this example, we've got a benchmark of 12, at which there will be a 15% profit share. Everything over 15, we'll share at 20. And if we can manage to make 20% IRR, then we deserve to get a 30% profit share as well. So you can see very easily, all those add up to just shy of 400,000, and that is what we will be receiving in the promote fee. So when we come up to the top again, you'll see the IRR for party 2, who was getting 100% of the promote, is now jumped up to 30%, and that is because party number 1 is paying them a promote fee. Nice. So everything you've seen so far, that is how you would run your analysis for your standing asset. You've obviously got some charts here, and because this is Excel, we've built it in Excel because it's simple to use, easy to pick up. But number 2, what it enables you to do is add on extra custom sheets on top of this model. So what we hear again and again is, okay, you've got everything I need here. You've got my returns. If we come down to our cash flows at the bottom, you've got my running yields as well, my return yields, my cash on cash, my debt service coverage ratio. But I would like to present those a little bit differently. I want to have my logo. I want to have my colors on. So what that means in Forbury is that you can very simply add new sheets on top of this model. This is going to be Ryan's report. And because we are in Excel, it's very simple. You can then do as you wish on these custom sheets to go and summarize information as you like it. So for example, I might want to refer to the IRR here. And so you can imagine as you start to build this out, I want my IRR displayed here. I want a text box where I can write a business plan for this, and I want my logo and colors at the top. So complete flexibility with those custom sheets that you can build on top of the Forbury model. Now, we will move into the forward funding part. So you might have seen in this dashboard, there is an option whether you want to use forward funding or not. So we've had that set to no, but I'm going to change that to yes now. So you'll see a few things chop and change some of the settings, but we also get access now to this forward funding sheet. So kept it tight. Again, just like the other tables, you can insert as many as you like here, but starting from the top, we go, what is the date of land purchase and the construction completion date? So once again, I've got some nice bits of data that I can just throw in. So it's going to be a very quick build. We're going to buy this 1st of Feb 2025, and we're going to complete it in May 2026. You can then throw in your land purchase price. So let's say, for this sake, it's 12 million. One more zero. Any other fees on top of that, let's say 5% on top. Agents and legals are 1.8, and our stamp duty on top of that too. And then in any other pound amount fees that you want to make clear too. Then we get into our construction costs. So these are your equity contributions to the developer to go and construct this multifamily building that you've agreed to. So let's go and throw in some of these dates. Once again, the demo's purpose, I'll throw in some dates here and also some amounts. You can label these as you like in the description. It's not necessarily, but if you want to say this is tranche 1, tranche 2, you can flexibly name those as you like. And then your fees relating to construction, you might have some, again, some professional fees. I'm going to link them up like I would do in Excel. So we've got some professional fees coming in here. Final sections are your developer's profit. So right now it's set to be paid at the completion date. But I can say, well, the developer's going to need a 10% profit, and that's going to be based on either just the construction cost, just these equity drawdowns, or on the land cost as well. I'm going to be a bit mean and just put total construction cost only. And then finally, your coupons. So you've been giving away this equity, providing all this funding, and so you may need a bit of a return on that equity that's doing nothing at the moment, that's funding all this build. So we're going to receive a 6% coupon, which will be paid quarterly, and that will be a percentage of the land cost and the running construction drawdown. So as we start to draw down more cash that we've contributed, so our coupons will go up as well. Right, so we've got a land purchase 1st of Feb, construction completion 1st of May 26, and we just need to go and change our operational start date. So I'm going to say that's going to be operational shortly after construction is completed. And once again, operational period, we're going to hold that. We're going to get cash flows for another 60 months after completion's finished. So I'll run that model again. I'm going to assume the same valuation metrics. Key difference here is that entry, this is the value once operational. So we're going to start to capitalize our income once we start to become stabilized. That way, we have a basis to refinance our debt. We know the sort of LTV we can get once we're operational. We can move away from a maybe development facility into a more stable facility. And the exit, again, same as before. This is what we're going to exit at the end of our hold period. So just to paint a picture here, if I move into the monthly cash flow and we come back up, what we have now that we didn't have before is our forward funding cash flow here. So we've got our purchase information, 13 million going out the door at day dot. Then we start to draw down the construction costs as we go in amounts, and also our construction fee. We had our professional fees here. We're receiving some of our coupons. Like I said, that starts to get larger as the equity drawn down gets larger. And then as we come to the end, we've paid our developer's profit out here. And now we have a period before we let up, before our actual revenue starts to kick in. So you can see no revenue, no costs associated with operating the building up until we get to our operational period, and then our cash flows start to kick in. So you can play around with those lease up assumptions on your rent roll here as well, just like you did previously. But now, I've done a pretty poor job of funding this. And you know what they say, when you're running a model, you want to get to a no as quick as possible. So I see this come to my desk, I've thrown in the information, and within 20, 30 minutes, I can say to the person offering this deal, no, thank you. That's going to give me a terrible return. So that's what we're offering. The quickest way possible to get to a yes, a no, whatever you like, in order to proceed the deal or throw it away from your desk. And that is today's demo. That concludes both the standing asset valuation, but also the forward funding valuation too, and also in order to generate those return numbers to give you a good idea of whether this investment is worth your money.
Excellent. Thanks, Ryan. You make it look so easy. Right, so thanks to everyone who's attended. Hope you enjoyed the webinar. Please don't hesitate to contact me or Ryan. Contact us, we'll help you, whether or not it's the Forbury multifamily piece or it's the commercial asset piece. There's plenty we can discuss. We're also going to be at MIPIM in March, so you'll find us on stand r9.et. But again, contact us if you want to arrange a session to go through the tool there, or I'm more than happy to set up teams or come to people's offices. So please let us know. So thank you everyone for joining, and have a good morning.
Thank you.